expertise and the resource network? Is this a VC that can actually help me and create more value rather than just giving me capital? So I mean, I think that those are all points that as you think about choosing and selecting which VCs to actually talk to and to build those relationships with, that you need to start thinking about early on and do your research, go to the meetings prepared. And definitely, I mean, as you think about like the investment amount, this is also something to do with what Kath was mentioning about the stage of your development, right? I mean, I think what tax scenario where you have to prove the concept of what you're trying to do the MVP, so to speak, then you may not need a lot of money, right? But if you're then trying to get up to like a certain kind of scale, or you're trying to make certain market entries, or kind of you realize that the space you're in is even more competitive, other people are raising money at faster paces, and all of this you need to consider, right? Because if you go out and you're like, okay, well I only need like 100,000 to prove my case, but everyone else is already raising 2 million, right? I mean, you're really not going to have a very competitive position. Especially in like in the sectors where there's not too much barrier to entry, where there's not too much kind of core competencies, and it's really all just about market dominance, positioning, and first mover advantage. So I think those things could be helpful when you guys consider.
Something to add to Gary's point, the best fundraiser I've ever met is a Mormon preacher. He raised the largest seed round in London, and then he just raised, or is in the process of raising, a $4 million convertible note. And I was trying to think, why the hell makes him so good? So Mormon preachers actually they do this sabbatical, right? And they literally have to go to the foreign country and knock on every door and say, do you believe in God or something? I don't know what they preach, right? But it's kind of similar, right? So they get it on no's, right? Like some people will say, what the hell? Like, no. Some people say, I'm more receptive. But they're used to doing that. They're used to doing it over and over with a smile every single time. And I think that's the power of his fundraising. It's like he's literally evangelizing. He's selling, but I think more like evangelizing. And he has very consistent script, and he'll just talk it over. But every single time he talks about it, he's still passionate about it. He continues that passion.
So when people come to see you, the first time you meet them, what do you look for in a startup or in a founder actually? To decide not to invest, because that's the first time you meet them, to decide that you're going to look into it?
Well, I think for me, when you're investing in a company, it's not so much the product or the service that you're looking at. Of course, that's the basis for the conversation that you have, but I think it's also about the human psychology of people, right? You're investing in people. You can take a very average idea, but a fantastic management team, and that management team can take that product or service to a certain level. By the same token, you can take a fantastic product or service and then put that with a very poor management team, and I guarantee you they'll run that into the ground, right, 10 times over. So when you're looking at founders, of course, you read all the textbooks and say, oh, it's about execution capability, and that's very true. It's all about how you can execute. But the other thing that I've learned over the years of working with startups, and I've worked with so many of them, is that it's one thing that you never learn in business school, no textbook will ever teach you this, is how much staying power does the founder have, or does the management team have? And what I mean by that is everybody has a business plan, and it looks fantastic, and your revenue projections look great, but as Mike Tyson once said, everybody has a plan until they get punched in the face. It's very true, right? So whatever your business plan is, it's probably not going to go according to plan, right? You might have a technical glitch, your product might not come out when it's supposed to, you might have that one key customer that's going to come in, but the economy turns and then it gets delayed, and then it throws off your entire funding schedule. There's all these different what-if scenarios that can happen, right? So it's about the staying power of you as a founder or as co-founders. You need to understand from each of you is how much time are you going to invest in this financially? Of course, you quit your job, you have 24 months of funds set aside to do this project, and then of course by then we'll be cash flow break even, and then it's going to be smooth sailing from there. But what happens in year 3 when that doesn't happen, right? And there's always somebody that's whispering in the founder's ear, right? And the wife, the girlfriend, whatever it is, that's saying, look, you wanted to do this, I'm supporting you, we gave this 24 months, now it's 36 months, we need to move on with our lives, we need to buy a new house or have a child or whatever, and whatever that is, it puts a lot of undue pressure onto the company and to the founders, right? And then the eventuality is one founder walks away, then it's more work added on to the founders that are remaining, not to mention the morale goes down. So as an investor, you really have to understand the dynamics of the co-founders. How are they financially set up to do this? And all of that doesn't happen during the meeting. The meeting, they always tell you what you want to hear, right? Because that's the way these meetings are set up. I've never seen a pitch deck that didn't tell me what I want to see. Right? It's the chit chat, the 5 minutes you have before the meeting starts, or the 5 minutes you have on the way out to the elevator. What are you doing this weekend? That you start to pick up sort of the little nuances of human psychology of people. And I think that's really important. Is you really have to understand what drives the founders. What do they want out of this? What is the motivation? Is it a passion? Is it the creativity? Do they just want to list the company and move on to do something else? What is it that drives them? That's really important.
Yeah, I think for me, I think it's a mix of like the hard stuff, so to speak, and then the soft stuff, right? So you walk into a meeting. I think the soft stuff is more of a process, right? The whole hour or however long that it takes for you guys to do the pitch and for us to ask our questions. That's a constant kind of process where we're thinking about, where we're evaluating, where we're kind of processing our kind of image of you, so to speak, and what we think your character, your qualities would be as an entrepreneur, as a CEO, etc. I think the hard stuff, that is more things that are structured, right? So I walk into a meeting and other than like all the soft stuff I just mentioned, I look about, the first thing that I try to think about is, okay, well, is this something that would be interesting for me to invest in as a market, right? So like, is the space that you're playing in something that would allow for or kind of be able to have like a company like yours be a billion-dollar company, right? If the space that you're working in is too small, it's too like far away, it's too like far-fetched, no matter how good your model is, no matter how like strong your background is, it's just not something that I would look into, right? So that would be the first thing. And then like after like that market sizing thing is passed, and that's very clear, right? You walk in, you tell me what you do. That's like a 2-minute thing. I can tell, okay, well, this is something that would be interesting for me. Then I think about, okay, well, so then tell me, what are you gonna do in this market, right? What is your model? And that's something where like you really need to shine, right? You gotta really tell me and convince me that what you're doing is unique, is something that only you guys can do and can do sustainably and in a scalable way, right? So I think that those are things that are, they're things that every startup needs to grapple with and kind of be able to tell that story so that institutional investors like us can buy in. And then obviously the last thing is just the team, right? So like your background, how capable you could be to execute this, like what resources can you bring to bear, what unfair competitive advantages, blah, blah, blah. Those are the 3 tiers of the things that, in terms of the hard stuff, that we would be looking at. And again, everything can be made clear in 10 minutes, 15 minutes, usually half an hour maybe. I don't know, it just depends on like what you guys are actually doing, right? But you usually can walk out of the meeting with like a sense also of the investor, right? Like questions he's asking, his engagement. Is this something that you want to also spend your time on to continue to follow up, right? And for those, we're in Asia, right? Sometimes a no is a very long-winded, not very direct. I'll get back to you maybe next month. It's something we can consider, but it's just something that you guys also need to be aware of. And usually, like a quick no is probably the easiest, right? You're out the door and you're on to the next one. So,
reminds me of that Russell Peters YouTube thing when he was in Pacific Mall. No, I don't know if anyone remembers that.
Yeah,
Anyway, so it's funny. This advice is in different stages. Like I'm the earliest stage, he's next, and then this guy on the end, right? So that's the
But we're still
order.
early stage as well, right?
Oh, okay, fair enough. But that's the order,
Swap
right?
stages, huh?
Yeah, which is like it is a bit confusing, right? Like
It depends
this,
on how you define early, right?
but yeah, we're like $18,000, so we're that early. Yeah, Texas was like 18,000 plus $100,000 convertible note. And because the reason why I say that is because like I think we talked a lot about team, and then his team was last, and there's no fault in that. That's just how early stage guys think. It's team intangibles and so they're driven more on the stuff that you can actually kind of tweak, right? The financials and the teams. It fundamentally should be solved for at that point. Right? For us, we're so early. You're betting on the team, like you're betting on those dynamics, right? So for me, some really good points. So the one point that Derek mentioned was like resiliency. Just want to talk a little bit more about that because like the way we used to test it is sometimes you switch meeting times around, you quicken the pace of the interview, you switch things around, you make things uncomfortable, and you kind of see how people react to that, right? If they're responsive to change in a positive way, they're probably pretty resilient. If they take everything slightly negatively, that's usually a signal. So that's usually kind of how we test for resiliency to change. Conviction is something that we also looked at as well. So conviction, like how passionate and how passion is sometimes like I don't like that word because it's an emotional thing. I like conviction because you believe deeply that you're right about something. You believe in the market. You believe in your product. You have conviction. It's not just I'm in love with the idea. Everyone can be in love, but you have a strong sense of belief that this is the right course. You have the right team. That's conviction. The third bit is Derek mentioned team. Chibo mentioned team, so I'm not talking about that. The third thing for me is intellectual honesty, because everyone can be rosy about this product is the greatest stuff on earth, right? But for founders to actually take a step back and say maybe it's not as good, but this is how we can actually make it better, and be very intellectually honest about the product and idea and the team, and where it could improve, and get insight from investors, from partners, from whoever it may be. Be intellectually curious, that's tremendously important.
It's quite interesting. I can describe a little bit how I started investing in Dragon Lore. The first step, I think you're the earliest, next, and then it was Claire. So the way it worked is Jake, who was my best man at my wedding, who was a lawyer, showed up at my doorstep saying, I need 220,000 US to start a business. And I was like, Jake, you're my best man, here's the money, what's the business, right? So it's really trusting somebody that you've known for a very long time and know that if they're actually asking you money, they probably will do something great with it, right? So it's about the founder, it's about who they are and all that stuff, right? The second step was a larger amount with the team in place. And there you really look at the team, you really look at, is there proof of concept? So we went around and literally interviewed a few hundred clients, potential clients at the time, and asked them, do you want the product? And they all said yes, right? So pretty much all of them. And then you kind of feel that there is product in place, a proof of concept. And then when you start investing more, because Dragon Lore has raised a couple million now, right? It's about revenue generation. Do I see a revenue momentum? Do I see growth month on month that's really coming through? Do I see the ability to scale, right? So they've opened Singapore at minimal cost. And so I'm like, wow, that's actually quite cool. They could open many other markets with minimal cost as well. So it's really scalable, the proof of that, right? And the next level is really institutional, and there's a bunch of things that Chibo just mentioned that basically come into account, right? But I think the criteria are really changed depending on which stage of development you're at, right? When you develop momentum, it's all about momentum, right? So what kind of momentum do you see in terms of growth, and can you sustain it? What do you look for in a business plan? Right? I was in a similar forum last week. The room looked very different, but I think that was the same room. And people were wondering, like, what do I need to write in my business plan? I hear I need a one-pager. Some people say I need a 15-pager. It's a lot of work for the entrepreneur, and it's a lot of heartache and emotional involvement. But what do you guys expect from this?
Well, I think, Emmanuel, you bring up a good point. Is like, well, what structure, what format works best? And I think the answer is who is your audience? Who are you speaking to? Of course, when you're going to see an investor, you should know something about the investor. You should know what kind of deals they look at, what level of seniority is the person that you're talking to. For the first pass, it might be someone who's a bit more junior, or are you seeing someone at a partner level who's more senior? They're more big picture. They're not going to go through the numbers with you. Someone else is going to do that on their team. And maybe that person is only interested in the big picture. And once you get his validation, it gets booted to the next person to do a deeper level of due diligence, right? So I always tell them is like, you need to have an executive summary, that one page, that teaser that you can just kind of send out to people without not having to worry about, well, you need to sign an NDA before I share anything with you, because that's just, you want to get to funding, right? But the more obstacles you create to get there, it's just going to take you longer to get there, right? So I have to send you an NDA, you have to sign it. When you're traveling, you're going to sign it when you come back. But when you come back, you have to catch up with work, and then we fall out of touch, and then it gets prolonged. So you want to have that one teaser that you can get out to people that you don't mind. That's not going to just enough to hook them and get them interested, get the meeting, get the face-to-face, right? Then you have your 20-slide PowerPoint presentation, and in the end, the meeting usually ends with, oh, I like it, that's interesting, okay, can you send me your business plan, right? And then it's a deck, it's really thick. And I think the reality is for me, is like, I'm not going to read that word for word, but for me, when I see, never mind the quality, feel the weight, that tells me that you've done your work, that you've actually done a lot of work in that, and that shows me at least that you've thought this as thoroughly through as you possibly can. My job is to poke as many holes into your business plan and see if it holds water. And if it gets to a point where I give up, I'm like, you know what, clearly you're the domain expert. I only know so much about that particular subject matter, but you know what you're doing. But if we get to a point where we're going through your slides and I'm asking you questions and you're not able to answer them, it's like peeling back the layers of an onion. You get to a point where, you know what, this person doesn't really have a thorough command of their domain knowledge, and that's a red flag, right? So if you don't have it, that's fine, but somebody else on your team better be filling those gaps. So for me, I would tell you, you have to have sort of the basics. You have to have that executive summary, that one page that you can send out. You need that slide presentation that can take someone through an hour in a meeting, and then you need to have that business plan, the one that you send through when the due diligence starts.
I think before I give my answer to this question, I left out a bit of my introduction. So our fund, in China, we have a couple RMB funds, a couple US dollar funds. We invest in what we call angel, pre-A and A. So that goes anywhere from a couple million, 2 to 3 million RMB, all the way up to now 10 million US. So I mean, that range is pretty wide. In Hong Kong, we're investing out of the Alibaba fund. I guess you guys could see from today's batch, I mean, that range is also quite wide. So I'd say anywhere from 500,000 Hong Kong, 500,000 US, 500,000 US up to maybe like 5 to 10 million. So I mean, I guess that kind of gives you guys a range of kind of investments that we're looking at. Back to the question. I think, like previously I already mentioned, all like the stuff that we look for during kind of pitches. I think everything I mentioned in the hard part, the 3 things, and I think that those would all be things that I would expect to be in a business plan. So I want to talk more about that. I think just one thing that I would mention is a lot of people, or a lot of entrepreneurs that we talk to, kind of view the business plan as something that they're creating for their investors to see, or something that they're creating to show other people. We always encourage our entrepreneurs to think about it as, okay, well, this is something that you're creating to help you better streamline your thoughts about your business, right? Because all of the things that go into a business plan, all of the things that you need to persuade someone else to invest into your company are the things that you need to be crystal clear about in terms of the direction of the development and the strategy of your own business, right? As a CEO, if you can't even do that, then there's really no way that you know what your company is going to be doing in the next 6 to 12 months, right? So I mean, I would always encourage entrepreneurs then to, as they're writing the business plan, it's more something that you should be using to convince yourself, right? This is something that you would be using as a blueprint, as a roadmap. When you're talking to your employees, when you're talking to current stakeholders, this is something that is going to be guiding your own development in the next 12 months or however long it is. It's not like a homework assignment, you know.
But just in a follow-up to what Chibo was saying, is that just always remember the business plan is not set in stone, right? A business plan is always evolving, it's always changing, so it's never a final document, right? And you'll find as you go through your business, you're going to pivot, you're going to change, you're going to adjust, and your business plan is going to be entirely different from when it was written 6 months or a year ago.
Yeah, I'm going to go the opposite approach. I actually prefer no decks. I prefer conversations. I prefer emails. Yeah, exactly, because I only look at teams and conviction. So, like, I'm trying to think, I do get decks, right? But I think the better pitches that I get are usually maybe decks in the beginning and some light slides, but then there's a list, like, and then we start a conversation over email, and then it's like, well, what do you think about that? Well, this is how we address it. How do you think about that? So it's not really the business deck, it's the conversation behind that. So that's how I would answer the question. I think it's conversations, for me, it's conversations about the business rather than the deck itself. And so maybe you can start off with one slider, maybe you can start off with 10 slides, but it's the conversation around whatever that deck is and whatever that starting point is that makes the most sense. For me, that's the business. Because you can get a lot more data, you can get a lot of data on the conviction, the team, whether they know whether there's intellectual curiosity or not, or there's intellectual robustness about the idea.
Very interesting. Having been a consultant for 23 years, I don't mind putting documents when people send them to me. I even read them. Most of them are really bad, by the way, right? But that's half of a joke, right? Because most of them, you can see they've never been shown to someone who was outside of the business to give feedback. All of you have friends, right? If you have a document, give it to one of your friends, say, what do you think? Right? And tell me if it's really crappy. It's actually quite important. That's the first impression, right? If your document is really bad, probably you won't get a meeting even, right? So,
but that's why I'm okay with like getting a shitty deck.
Yeah.
Because like some people don't. People are possessive about it, and that's fine. Like, you know, it's like art. You know, you don't want to show it. But once you start the conversation, then you're like, oh, you actually, you know, there's a difference between knowing what you're doing and being good at decks. As a consultant, I'm good at decks, and I think I'm pretty good at having a good idea. But some people aren't, and I think it's fine. Versus if you see a deck and you're shitty, you're like, that's not a good idea. When in fact, maybe that entrepreneur does know something about it. They just can't put together a great deck.
Yeah, but it didn't bother, you know, trying something. Right? So the other thing is, yeah, if it didn't bother, like, doing that, right? So the other thing I believe in is analytics, right? And analytics-driven businesses, right? So, question is, do you put numbers, do you put projections and all that stuff? Frankly, not a big issue, right? But it's important to understand the economics of what you're getting into. And a lot of people actually don't really understand the economics of what they're getting into. And also, setting up these economics allows you to focus on what matters. What are the metrics that I'm going to focus on over the next 3 months, or the next 6 months, so that I can tell myself and I can tell